Steinhoff has to be aware that they are fighting a mighty and experienced opponent here. And to be frank, and again, the more shareholders get behind us, the more power we have. So our call goes out to the South African shareholders. Come and join us. You find us on the internet. That's an easy way. You can sign up, and we're all representing several dozen shareholders from South Africa.
Well, here in South Africa, the Steinhoff saga just won't go away. The biggest fraud, or perhaps allegedly, anyway, no one's gone to jail yet, but the biggest fraud in South African corporate history has got an international flavor. Steinhoff was listed in Germany, and that's where the real problems begin, as we're going to find out in just a moment. And it's a very warm welcome to Dr. Marc Liebscher. Just by way of background,
I'm German. I'm sitting in Berlin. It's a very cold but sunny morning in Berlin. Hello to everybody. And I'm an attorney at law in Berlin, specializing in banking and capital markets. And besides of that, I'm a member of the board of SDK. And I think we'll get to that shortly.
SDK is a Shareholder Protection Association. We don't have too many active associations like that in South Africa, as I'm sure you're pretty aware. How big are you?
We call ourselves the leading one. There are two really active ones. And we think of ourselves as the leading one. Yeah, sure. We've been around since the 60s, since the late 50s. We have around 9,000 members. And in Steinhoff, for instance, we are representing around 1,800 shareholders. And we participate in regulation discussions. We are very active in protecting discussion shareholders, special situations, crisis situations. And so we are around in the whole capital market thing and taking part in the discussion in the media and everything.
You're an attorney and you're also a member of the board of SDK. So you're right in the middle of it and the right person to be talking to. Before we go into this conversation on Steinhoff, which has got so many implications for so many shareholders in South Africa, your engagement or interaction with the Steinhoff board of directors, how has that been subsequent to the December 2017 walkout by the...
Well, we started our engagement only in late 22, so just kind of 4 months ago. We had a look at the financial scandal back in 2017 and had an eye on that, what was happening, but we didn't really engage all the time because we did not see a major issues here for shareholders in Germany. But what happened then that after 2018, a lot of German shareholders invested in Steinhoff because they had expectations that the turnaround and after the financial scandal, Steinhoff would become a viable company. So what happened that in 22, actually, a lot of German shareholders became shareholders of Steinhoff, and that was the moment when we started to have a closer look at Steinhoff.
And you voted at the annual general meeting en masse, and unusually for South Africa, you overturned all of the proposed resolutions by the Steinhoff board. But most importantly, the idea that this company was then going to be going into a reorganization in which shareholders effectively would give up their rights. Just explain to us the rationale and how you managed to get such a strong block together, because in a South African context, to have resolutions at an annual general meeting voted down is most...
Yeah, we realized that the proposal 15th of December 2022 that was published by Steinhoff, very unexpectedly, a huge surprise, was very to the detriment of the shareholders. We had then over Christmas a closer look at the proposed restructuring and came to the conclusion, hey, this is for a plus for the creditors and a big minus for the shareholders what the company is proposing. And then we started to engage with the shareholder base. We are quite renowned in Germany. We were very much the ones who brought the Wirecard scandal to light already in 2010, 2012. Since then, we have quite some name in Germany, and people kind of listen to what we say. They do not have to be of our opinion, but we are heard. And so we started to collect shareholders, inform shareholders, hey, to the reasons ABC, we think that the proposed restructuring is very bad for the shareholders. Do engage, do come forward, do come together and vote with no against those proposed restructuring plans in the AGM. And we were lucky that more than almost 1,800 shareholders issued proxy voting rights to me in person. And then I was lucky to have on the AGM to represent around 23% of the whole share capital, and we were able to vote down the proposed restructuring ideas of the board, because it was very much to the detriment of the shareholders.
And to the benefit of whom? Who would have been the other side of the coin?
Creditors would have hugely benefited. The idea of the restructuring that the board presented to the shareholders is that the whole company, and with the whole company, all the assets of the company, go in the hands of the creditors. And the creditors become owners of the company and become owners of all the assets. That is a good idea and an okay idea if the company and all its assets are less worth than the debt the creditors are holding. But here we are of the opinion that the debt and the claims of the creditors, all in all, are less worth than the assets of the company. So what would have happened is that the creditors would have gotten all the assets that are more worth than their debt, and such would have made a huge plus. And the shareholders that normally would have been entitled for that plus, they would have ended up with nothing.
So let's just understand this for people who don't even know what a creditor is. You've got a company, and it's owned by shareholders who've bought the shares through stock markets. The people who have lent money to the company, or in this case, many people who've actually bought distressed debt. So the money had been lent, it was sold and passed on and traded, in some cases at a fraction of the actual amount of money that was lent through. Those are your creditors. Those are, and largely, I guess,
opportunist hedge funds all over the world. The household names, the household names that you hear, BlackRock and JP Morgan and so on and so on and so on,
So you're taking on a very sophisticated group of people on behalf of the small guy.
We're having a go at the man, and that's what we've been doing for 60 years. That's what we've been doing for 60 years, to get retail investors, smaller investors, family offices together and fight against the larger ones. That's what we're doing. And if it was just us, then there wouldn't be any use in that, because we would be too much of David fighting Goliath. But when a lot of Davids come together, they can easily make up several Goliaths.
And how much do the hedge funds stand to make? Let's just say that the proposal that the Steinhoff board had put on the table in December, and have reiterated again last week that they believe that this is the right way to go, and the one you're against, if you had to have voted with them, if you'd said, yes, let's go ahead with it, or indeed if it does actually happen, how much will these hedge funds
That's
profit?
A very good question, Alec. It boils down to the question, how much are the assets of Steinhoff worth? That is the basic bottom line. And that's a question of the valuation of the assets. So we did preliminary valuation calculations. We have some financial guys, financial advisors, huge financial advisory firm from the US engaged. And we are of the opinion that Steinhoff is worth around 12 billion euros. And the debt now is worth 10.2 billion euros. So the creditors, in our opinion, are aiming at an extra plus that they are not entitled to of 1.8 billion euros. So quite some money. And you have to keep in mind that they bought the debt for a huge discount. We think approximately around 60% they paid for the debt. So they are already in the money with the 10.2 billion euros and will get even more in the money with the extra 1.8 billion, with the extra 1.8 billion euros. So what we are seeing is that the creditors are gaining a huge windfall already, and still want to throw the shareholders under the bus and make an extra 1.8 billion on the detriment of the shareholders.
So the big dispersion or diversion here is that the Steinhoff board says those assets, if it were to be liquidated, if the company were liquidated, would be worth 6 billion euros. If they go into this reorganization that they're talking about, then call it 8 billion euros. You're saying that actually the value of the assets is truly 12 billion euros, another 50% more than the best case scenario. How do you motivate or justify
We
that?
looked at the valuations that they put forward. And we had a closer look at the valuations that they put forward. They put forward a valuation by EY only in January, only after we opposed and said, hey, we are opposing this, where is a valuation? And in January, they put forward a valuation of EY, and that was so superficial. It was completely superficial. 6 pages long, only 6-7 pages long, no granular data. EY said, well, we have not audited the assets. We are just using the numbers and indications that the management board gave us. And according to these numbers and assumptions of the management board, valuation is okay. And in addition, we are not liable for anything. A huge lines for caveats and disclaimers. So it was clear to us that something is fishy with the valuation if they come forward with such a superficial valuation with it, which only consisted of disclaimers. And in addition, it was surprising, it was a huge surprise that they came forward with a restructuring plan only on the 15th of December. Steinhoffs management said all through 22, they said everything's fine, the turnaround is going well, shareholders, don't be afraid of anything, we are running according to plan. And certainly they communicate, hey, the creditors want their money now, they are no longer willing to postpone the maturity. And they came forward with the restructuring plan. This is the restructuring plan. And we're going to vote on that restructuring plan within the minimum period of 42 days. All that was communicated on one day. And before, for 12 months, they were communicating everything was fine. So what happened? Suddenly a complete, absolute turnaround on the communications, on the merits, what was going on in the company. And that was really a surprise. And you don't do that. That's really bad communication with the capital market. And that all added up to us for the assumption, hey, something fishy is going on here.
From a South African perspective, the executives at Steinhoff have been well remunerated. In fact, there are some critics who say they're just trying to continue with this very high remuneration that they're enjoying. And it's in the tens of millions of rands. Might not be that much in euros, but in a South African context, it's handsome. However, what you're saying now is that there could be even something more to this. Now, just again for basics, shareholders appoint management. Shareholders appoint the board, rather. The board then appoints management. In this case, if you've already voted down all the proposals, why do you not go to the next step and say, well, let's change the board and let's actually have a different management team who perhaps will be serving shareholders rather than, as you are articulating.
Well, Alec, that's an idea, and I will not comment on it because, as in every fight, you will not show your cards to the opponent and declare all the moves that you are thinking about before you did that. So that is a very good question, yeah.
So it's an option that
It's an option, and it's an
with.
option we're looking at for sure. It's an option we're looking at. We have several options. And we have, for us, we found out, I think, what options we will take, where we'll go for. And this is one option, yeah, Alec? True.
But as a shareholder, surely the people who are running the company now should be turnaround experts, not lawyers who are knowing how to negotiate and divvy up the assets that are there. It's almost like you need a different type of skill.
Skill and different type of mindset. You have to be a bad fighting Reno and not some kind of pussycat sitting around and listening to what the shareholders are saying. And that is what the management is lacking. We think the management lacks professionalism, it lacks stamina, it lacks backbone to fight the creditors, to fight for the turnaround, and it also lacks independency. We have the impression the management board is not fighting back the creditors because perhaps at some points they are not so independent from the creditors as they should be.
So the management board has put on the table that shareholders would get 20%, all shareholders would own 20% in some unlisted entity that will replace the listed entity at the moment. Why are you so opposed to this?
20%, that would not even be shares. These 20% are some special rights called CVRs, and they would entitle to 20% of the surplus that the company does make in the following years, 80% of the surplus the creditors would be entitled to. But these rights, they are not tangible, so you cannot trade in them. They don't give you any voting rights in the company, so the creditors would be calling all the shots in the company, and then for sure we know what would happen. There never would be a surplus in the company because the creditors would have so much debt, would have always raised the interest. The interest already is 10% payment in kind, so your accrue interest on the interest is much too high. So in the end, what would happen there? The shareholders would have the impression, well, we got 20% of these special rights, but we cannot trade them. Doesn't give us any voting rights, and still the company is not making any money because the owners of the company, which are the creditors, would just get out every money that they can.
And these are people who are already deeply in the money, whereas the shareholders are, well, making big losses, no matter who they might be or whenever they bought those shares. Mark, what happens next in this saga? Because last week we did have another update from the management board at Steinhoff, who say they don't really care what you've effectively. It's 100 and some pages. I haven't managed to read all of it, but from what I could understand, that they actually don't care the fact that you voted against the proposal.
They're going ahead with it anyway. We expected that, and now the fight goes on in a different forum. Last week it was the AGM. We voted down the proposal of the AGM, and now we're moving into the Dutch courts. And we're looking forward to that. We have retained a huge, very renowned Dutch law firm, very renowned US financial advisors, and we will fight the restructuring plans that they are now laying forward in the Dutch courts. It's the so-called VOA proceedings. This is out-of-court proceedings according to a restructure plan that the management proposed to a Dutch court. And then the Dutch court will hear the different groups and stakeholders, inter alia us as shareholders, and we will argue in the Dutch court, hey, this restructuring plan that the management put forward is unfair to creditors because it assumes wrong valuation. The valuation of the company and the assets is much more higher than laid down in the management's restructuring plan.
That's going to cost shareholders money, going to court, fighting in court. Surely, if you have the ability to vote down proposals, you should be replacing management and ensuring that they don't spend more of shareholders' money by taking all of this.
We should replace management. And regarding the money question, we are an NGO, so we are getting our money from the shareholders. We have more than almost 1,800 shareholders collected, and they are supporting us. And very much our call goes out to the South African shareholders to get in the boat as well and to fight that restructuring plan. And the shareholders, all these shareholders gave a little money, not much money. It's just 40, 50 euros per person. And with that money that we collected, huge shareholders gave more money. We have a war chest that is filled to the brim. And with that war chest, we are paying our lawyers' fees, we are paying the court fees, and we can very nicely fight what the management is putting forward. And we will try to see if we can get into the driver's seat. What you are asking is the question, get into the driver's seat, management board, supervisory board. But there are questions to that that are more complicated. We have a huge battle before us. We have not only the Dutch court fighting against the restructuring plan, we are also in the Dutch courts to start inquiry proceedings against the management. That's another front. And the third front that we will open will be in Germany. We will sue the management because we are of the opinion that they too lately informed the capital markets about this new restructuring plan. That was too late, and such we think they violated ad hoc obligations to inform the capital market earlier, and thus are liable for damages to the shareholders. So we have 3 to 4 fronts that we are fighting, and that is complicated. And we have a lot of work to do, but we have very talented people. We have very, very good enough money, and we are motivated to do that fight. And we've been doing these fights now for 60 years. That is something we are experienced in, and we had our successes. Wirecard, for instance, you all know Wirecard was the big scandal in Germany, the largest financial corporate fraud since the Second World War. And we started our fight against Wirecard already in 2008. We won our first lawsuits against Wirecard 12 years before they went down. So Steinhoff has to be aware that they are fighting a mighty and experienced opponent here. And to be frank, and again, the more shareholders get behind us, the more power we have. So our call goes out to the South African shareholders. Come and join us. You find us on the internet. That's an easy way. You can sign up, and we're all representing several dozen shareholders from South Africa.
So the easy way is Google SDK Steinhoff, and you'll get the organization up there. Dr. Marc Liebscher, good talking with you. I'm sure this is not going to be the last time. I'm Alec Hogg from BizNews.com.